increase from certain pairs within those articles. I actually clicked that this time, and the one I clicked was for the 10-year U.S. government bonds,
Oh yeah,
and
yeah.
yeah, something so um, valuable. I think could prove to be valuable. I haven't gotten my side by side up yet and seen the day-to-day fluctuation of this percentage from the government bonds and how that correlates to the DXY index. Um, Mainly how that correlates to the DXY index. But today, we're noticing that the dollar is currently going bullish, right? And I'm looking at this US 10Y is the ticker symbol, and they started the day at the percentage of the yield of the government bonds started the day at 3.7%. Now it's closing. It's moving up, so bringing more appreciation, more value to these government bonds, right? Which is going to bring more value to the dollar, which makes sense of why, again, we are going. We had that bullish
Now,
news. So
isn't that converse though? I mean, like the dollar goes down, the bonds go up, right?
the
Because
dollar needs to. I believe the but when the bond percentages go up, that is when the value of the dollar also goes up. Because when people are buying those government
right,
bonds, they are
they're
anticipating
worth
that
more.
there's appreciation coming from them holding a USD asset. You know what I'm saying?
Right.
Um,
Yeah, yeah,
when Yeah. And so
yeah,
on
yeah.
the inverse of that, when those bonds are appreciating, the gold is depreciating. Something like a gold is depreciating
Hmm.
because those are on the other side of each other. Because gold does not accrue anything like an interest or a yield similar to a bond does.
Hmm. Hmm.
Yeah, and then it brings me to back to those 10-year and 30-year bond folders that we get every I think it's like every month, might even be more frequent than that. Those are when we can really analyze um, those interest rate movements. Yeah, me and Q were getting into some of the economics yesterday. Sounded like he was actually watching the video we were watching last night. Um, and yeah, just the whole macroeconomic picture is just it's honestly just beautiful, big beautiful system once we understand. Let's see, let's check this 1 hour chart. Man, this looks really good. And dollar has come into a is Q back yet? No, I'm gonna do this. Go ahead. Share my screen here. Yeah, so this is what I was noticing, of course, our consensus, like you said, versus our actual. Let's show you this real quick. Now, I don't know honestly about this folder yet. I have not put it into my, AI to see what this folder means. But what I did see is within this folder. Oops. It says the CFNAI, Chicago Fed National Activity Index, is a measure of overall economic activity and inflationary pressure based on a weighted average of 85 monthly measures of national economic activity. The CFNAI calculates national economic activity. It averages zero and has a standard deviation of one due to the fact that the economic activity tends to grow at a trend rate over time. A positive reading indicates growth above the trend, and a negative reading indicates growth below the trend. A higher than expected figure should be seen as positive. A lower than expected figures should be seen as bearish. All right. And so this is us figuring out which news folders not only are going to impact the market, but on that long term scale, how is it going to impact the market? Right. Because as I'm looking at my chart right now, let me pull up my USDJPY. That's not USDJPY. So as I'm looking at my chart right now, I'm noticing like, okay, where can price go really from here? That's kind of what I'm trying to understand. Like, where can price go really from here? There's a number of points that I can see price getting stopped trying to move bullish. Um, and then I think about, okay, but we just got such strong like USD news. So there has to be something that is telling me that there could potentially be a shift in the, momentum. Um, I see some liquidity here, really close to a decision making level that I can see price going to recover before moving bearish. So I have that liquidity there. Literally, liquidity is happening on my 1 minute decision making level, right? However, this is my 1 hour time frame I'm looking at right now. So on my 1 minute level here, where this horizontal ray is a strong decision making level. Also, right below a point of liquidity that price could literally just go wick above and then start to move back bearish. The only reason I'm saying that is because this folder in specific, the consensus, so they thought it would actually be in the positive side above that zero line, where it says right here a positive nope, a little bit. Let's see. It averages zero and has a standard deviation of one due to the fact of economic activity tends to grow at a trend rate over time. A positive reading indicates growth about the trend, and a negative reading indicates growth below the trend. So this is a negative reading indicating growth below the trend, right? But they were anticipating growth above the trend. They were anticipating positive growth in a point zero 0.03. And this was a whole negative 0.37 below what they anticipated, right? And so this contributing directly to economic activity and inflationary pressure. We talked about this a little bit yesterday, me and Q, in this video. They were saying the three factors that impacted the economy the most of how we can understand the economy was productivity growth, was I believe it was spending. I know productivity growth was one. Q, do you remember the third one? Productivity growth. It was spending, and there was one more that affects that cycle that we were looking at, the short term cycle,
It,
the long
it,
term cycle, and
it, okay, so yeah, so I just remember the graph and it being productivity being the linear line and the
yeah,
long-term debt cycle, and then the short-term debt cycle. I'm taking some notes right now on this video. And
yeah,
in about 5-10 minutes, I'm gonna kind of walk us through um the the big picture stuff. It's like the last 10 minutes of the video. Just give me
no,
one second.
but
Just getting these notes together.
yeah, it was
So
literally
good.
towards that last part of the video. where he said they did three. Anyways, what I got from that video was productivity growth having the larger impact on how the economy improves and the rate of its improvement. And so I think this folder might be the one that will potentially drown out the labor market news. Not that this labor market news isn't important, but first of all, this news is so frequent that it is more measuring us on a short-term scale because there are other news folders to measure the labor market on a wider scale, on more of a long-term scale for our trends. So want to see how we react um to that news there. I think we'll potentially try to move bullish a little bit and then start to actually move back bearish.
Hmm, I'm not sure. I reckon gold's gonna go bullish. I reckon, and dollar's gonna drop.
If I take a look at my gold chart, it's a really, really strong decision-making level is sitting on right now, which I can see that there is.
Hmm.
Oh, this is so beautiful. So 30-minute, looking at my 30-minute right now, I have decision-making level there that price has respected continuously. And then I also have most recently a decision-making level, oops, right in there that we're sitting on now. So I want to see if price can close below this level, even though it did briefly there. Looking at my MACD though, we're losing that seller's volume. So even though once again it did close below this 30-minute level here, volume isn't really indicating that we have enough selling pressure to move below even more. So I want to see how price utilizes this level here specifically at this moment. And even if I went up, this is what I wanted to see too. Even if I went up to a higher time frame, it's gonna bring me to why this candle structure is so important for me finding my levels because when I get multiple at one area, it's even giving me more, leaving me more with the viewpoint of, okay, we have to close below this area if we're gonna move below this area. Just because the strength of these three candle structures indicating this is a decision-making level. Losing that, potentially peaking out on our MACD volume here on this higher time frame. Um, so yeah, it's actually clean. Let's see how price reacts at this level here. And if we think about it, like gold really shouldn't be moving bullish if all the weight was placed on the labor market news from this morning, right? So if the market was going to move based on just these three folders, then gold would actually be going down. Um, but this is why I brought up this folder because this looks like, from just my brief analysis on it, that it has more weight than the labor market, um, which in the Discord, I'm pretty sure we have some stuff on this same, yep, labor market right here. So let me actually see something really quick. Jobless claims.
When are they expecting the The rates to be raised.
What was that?
Do you know? When are they expecting the rates to be released?
It's
Do you know?
September. Yeah, it's September. I'll pull up the
Oh,
exact date right
September. No, yeah, that's right, September. So next week.
here. Yeah, September 18th, November 7th, and December 18th are the next 3 dates this year that they'll be adjusting the rates.
Right.
It's anticipated for sure uh, a rate cut coming on the 18th.
Yeah.
And then it's also speculated that there's going to be one more rate cut before the end of the year. So they have basically three opportunities to get us two rate
Right.
cuts, um,
Right.
per
Wow.
anticipation of the market, like the sentiment. But this is funny because yesterday when we looked at this number wasn't 71%. This number was like 67%. And so we can start to see the minor fluctuations in this because of this, right? As we get more data, we will start to see the fluctuation of if, are they going to exchange the rates to 500 to 525 base points? Are they going to exchange the rates to 475 to 500 base points? And we'll start to see those percentages just continuously change as the closer and closer we get to that date. Um, so
Oh, interesting. So
and
yeah.
yeah, so on Friday, I think is the main day for Jerome Powell at the Jackson Hole Symposium. Um, which I'm gonna take a look at that. I don't know if I'll watch the actual speech, but definitely look over like the transcription and whatnot. Um, because as I'm just thinking about his speeches in the past, I've heard him just say a number of different times, um, that they understand when it comes to the interest rates, they being the Fed. um, they understand when it comes to the interest rates that they can't wait too long to cut. They can't cut too early. Within that, I do think they're thinking about them not cutting the rates too much. Um, wow, that was really clean there that worked out that way. Not cutting the rates too much. So as we start to see, oh, what are they going to cut the rates to? I'm kind of interested to see what they cut it to. So PMI on the list of agenda next should have some stuff on PMI in here as well.
Damn it.
Nothing on PMI. Oh, I have some PMI news somewhere. All right, all right. So which photos we have? Manufacturing PMI and services PMI. Mm. All right. So thinking about we have global manufacturing PMI and global services PMI coming up here. Um, just once again thinking about that video from last night, and Q will be able to provide us some good notes on that in here in a sec. Um, My takeaway from that was analyzing these folders that influence productivity. Um, so that's the manufacturing folders. That's the industrial production folders. That's the Philly Fed manufacture, like those type of folders that are correlating to production, uh, importing, exporting, um, just the cycle of making products to have to be able to distribute. Um, is kind of my takeaway from it. And so this global manufacturing PMI and global services PMI, the difference of the two being manufacturing covers the industrial sector, services covers the real estate, finance, and healthcare sector. So we're talking about one covers 80% of the economy and the other covers 12% of the economy. We would think services would have the most impact because it covers the most part of the economy. However, that is not completely always true because service services are not impacting anything in terms of productivity. It's real estate, finance, and healthcare versus the industrial sector that this manufacturing is going to contribute to, right? And one of my favorite parts about, what the difference is between manufacturing and services that I'm noticing is I really like this part right here. Manufacturing is more sensitive to global economic conditions and trade issues. So something that could definitely impact the market more in this, if we think about the economy right now, is the manufacturing, in my opinion. Um, thinking about the stuff that was going on with the prime minister in Japan and how they were mentioning the import exporting deficiencies that I think it was they weren't able to import as much as they were able to previously to him. Um, and so hurting their economy. And we kind of are all working together to make sure our individual economies are working efficiently. It's like when one economy is starting to digress, the other economies feel that it a little delayed, but they feel that uh, as we're getting this rejection from this 5 minute level is exactly what I wanted to see. Yeah, if price respects this 5 minute level, I think we'll definitely head back to this 4 hour level. If it does not respect that 5 minute level, I can see us going to take out this liquidity first, because this is liquidity that was generated by institutions. Institutions. How do I know that? Well, I don't really know that because everything is speculation in the market. I can make a really, really, really good assumption that this is in institutional money right here because this was on news. This was on
Right.
news, and nobody else is moving the market like this on news with the strength to actually not allow it to stay there. Like retail traders couldn't have got it to this point, and retail traders couldn't have brought it down from this point. It's just not enough money in our pockets to be able to do that. Um, I'm trying to see which level this was at. 146.9. So 146.9, really, really close to 147, right? Really close to a 147 flat. which a 147 flat, I would personally indicate a institutional number. Like that's an institutional number. And so the fact that there's liquidity so close to an institutional number, if price does decide to move bullish, I can see us getting stopped somewhere around this level. Um, that's just my speculation about what's currently happening and what could potentially happen, all dependent on this 5 minute decision making level right now. So if we blast through that, I'll reevaluate. If we don't, um, I'll look to see the market go down. I have not actually entered anything yet. Um, I need to load some funds to my trading account. But I do have, damn, Trade Locker always logs me out. It's actually one thing I do not like. So clean right here, man. This is so beautiful. Let me look at FinViz real quick. It's so clean. Just those areas, those areas, those areas. All right, so USD JPY in the green. I don't remember what it started the day out at. I did not see it. But we'll just monitor it from here. So +49. Let's check the market sentiment. I need to just log into my FX book already so I can save my stuff. Because I don't like when it has all these. I just care about STJPY, ADJPY. Any pairs particularly you guys are looking at, maybe wanting to just know the market sentiment around it. Right now I have a USD JPY, gold, and AUD JPY selected. Any others? Any others? What about a USD CAD? Let's throw that in there. All right, so market sentiment, 53% of traders are shorting USD JPY, 47% are longing. Good grief. 81% of traders are longing USD CAD. 61% of traders are shorting. 60% of traders are shorting gold. Interesting. Oh yeah, I would be eyeing an entry at this point. Get my trade locker up real quick. Ah, makes me log in. Get my login info. Yeah, if you're me, I'd be eyeing an entry. I'd be eyeing an entry. I'd be liking an entry soon. Where's my volume at? My volume at? There it is. So I just want to see this area right here get respected. It's another 5 minute level there. Just created.
Okay. All right. So I just got through this last probably 10 minutes or so of this. It's about a 31-minute video from Ray Diallo. The YouTube channel is called Principles by Ray Diallo, How the Economic Machine Works. Um, and this last 10 minutes of the video is particularly interesting because it puts so much light to where we potentially are as an economy, and um, it draws reference to just past things that have happened. Uh, So anytime we are moving towards a deleveraging in the economy, whenever inflation is getting too high, there's four ways in which there's four ways in which um, people and businesses and the government um, will deflate that deleveraged economy. So those four ways are people, businesses, and government will cut spending. That's one. Number two, debts are reduced through deficits and restructuring. So you look at a company like SoFi, pretty new company, um, really large, and they specialize in debt restructuring. That's what they do. You see the rise of a company like that in our current economies. That's just a little sidebar. So I'm read number two again. So debts are reduced through defaults and restructuring. Number three, wealth is distributed from the haves to the have-nots. Yesterday, you see Kamala Harris support Joe Biden's proposition to raise taxes to capital gains taxes to 44.2%, which was me and Marcus were laughing yesterday because we literally saw that happen today. And then, we kind of relate that to this video. So again, wealth is redistributed from the haves to the have-nots. And then number four, the central bank prints more money. So those are the four deflationary ways the central bank and the government and businesses will do to deflate a deleveraged economy. Um, and so in that case, people generally speaking, people are desperate for money. People are desperate for money, and having dropped interest rates to zero, the the central bank is forced to print more money. So we're talking about rate cuts potentially happening. This is what makes this time so intriguing because we've been in an economy that's being deleveraged and it's super inflationary. And you see these deflationary methods happening literally as we speak. There's a couple of things that I reference. Um, so if the central bank is decreasing and dropping down those interest rates, it can't go past zero. So if it gets to that 0 point, the central bank drops interest rates down to zero, and there's no stimulation that happens, they're forced to print more money. And unlike the four deflationary ways that I just mentioned, printing more money is inflationary and stimulative in that case. And the central bank uses that money to buy assets and government bonds. See, the central bank can't put the money in our pocket, the people's pocket. The central bank can't fund people. But what they can do is print more money to buy assets and to buy government bonds. And so in the Great Depression, back in the 30s, I believe and I might get this number wrong, but I believe the federal government printed about, I think it was like $2 to $3 trillion. So like in that day, ton of money. In 2008, the Fed printed $2 trillion. Excuse me. In the Great Depression, it was like, uh, yeah, no, I had that right. I had that right. But in 2008, and this is the number I have locked in, the Fed printed $2 trillion. So by buying financial assets with this money, it helps drive up asset prices, which makes people more creditworthy. But that only helps people that own financial assets. So with the central bank buying assets, so I said they buy government bonds, which I'll get to in a sec. They'll buy financial assets, and by the Fed buying financial assets, it increases the value of everyone's financial assets, right? Making us more creditworthy in that case. But like I said, that only helps people that own financial assets. A lot of people don't have financial assets or a lot of financial assets to make themselves appear more creditworthy. Um, so I noted here, so the central bank can print money, but it can only buy financial assets. The central government can buy goods and services and put money in the hands of the people, but it can't print money. And so you see
Mm.
quickly, how the two forces, how the central bank and the government have to work together, particularly in a time, honestly, like we're in now. We're not quite in the predicament of the Great Depression or 2008. But you kind of see the correlation with a lot of things that I'm talking about here. So again, I'm gonna read that again. The central government can buy goods and services and put money in the hands of the people, but it can't print money. In order to stimulate the economy, the two forces must work together. By buying government bonds, the central bank essentially lends money to the government. That's all that transaction is. They buy bonds. The central bank buying bonds is really just them lending money to the government.
Mhm.
Um, which
Which is
which
what,
allows the government to run in a deficit and increase spending on goods and services through stimulus programs and unemployment benefits, which there increases people's income.
that's like, do you recall what 6 months ago when the government was about to be, well, it was a hung government basically,
Hmm.
um, because the financial institutions weren't going to lend them the money
Hmm.
to continue, and it was basically you were going to end up with no government. Do you remember that?
Yeah, yeah. And the video touches on that because if if they get this wrong, if they get this wrong, like what happened in the Great Depression, you see political change and political unrest. Um, and so Marcus and I, we were talking about in 2008, excuse me, in the 20s and moving into the 30s, what happened during that era? Hitler, the rise of the regime in Germany and Great Depression in America. So whenever they start to really get this wrong, whenever they can't find a balance between the inflationary ways and the deflationary ways, and that happens over a period of about 10 years, you see political unrest, especially in countries that are related um, in a debtor to lender relationship. So a country like the United States lends a lot of money out, to back then countries, smaller countries back then like Germany. And so whenever those
Japan.
countries' needs are met, political unrest happens. As here speaking to the rise of Hitler and the regime in Germany. So policymakers, they have to balance those four deflationary ways and the inflationary way, which is printing money, in order to maintain stability. Um, well, and so the question when it comes to printing money is, people think when will printing money raise inflation? Not if it offsets falling debt, not if it offsets falling credit. And so,
Oh,
order
okay.
for things to turn around, the central bank needs to, one, pump up economic growth. Again, how does it do that? How does the central bank pump up economic growth? By buying government bonds and purchasing bonds. But the important part is, so it can't only just pump up economic growth. It has to get the rate of income growth higher than the rate of interest on the accumulated debt. Income needs to grow faster than debt grows. You need to print just enough money to get the rate of income growth above the rate of interest. And so this is where the policymakers have to be really, really, really careful, because if you can't print too much money. If you print too much money, that creates a whole just a recurring cycle of problems.
A
If you
whole nother
print too much,
Italy. It's a whole
go
nother
ahead.
Italy.
Hmm.
It's a whole
Hmm.
nother Italy
Yes. Yeah.
when they do that, right?
Yes.
You can print money to get yourself out of it.
Yeah.
And that's the thing that
Yeah.
the way printing money, and when you think about it, I don't know what the percentage is, but it's an incredible amount of a high percentage of the amount of physical cash that America has.
Mhm.
Majority of it is from printed money. It's not from old money.
Yes.
The government bonds are really just the way that the banks can secure their authority over the politics.
Yes. Yes.
You know,
Yes.
so that's how the manipulation works.
Yes.
Um, yeah, right. I mean, that's economics. That's the way it's always worked.
Yeah.
Um,
Yeah. Yeah.
works.
And it's so interesting that, this is just how economics works, not in the United States, but in Germany, Italy, everywhere, every economy. It's constantly trying to find the balance between, it's just constantly trying to find that right balance between printing more money, to stimulate economic growth. So when incomes rise, borrowers seem more creditworthy. And when this happens, lenders give out more money, and the overall debt burden falls. So we go into more debt as a government. The Fed, the federal government goes into more debt, but in doing that, it decreases the overall debt burden. So able to borrow money, people can spend more, and the economy begins to grow. And that institutes the reflation phase. And again, I'm gonna repeat that, but I'll preface it by saying one person's spending is another person's income. Ray Diallo says that probably 20 different times over the course of this video. One person's spending is another person's income. And so able to borrow more money, people can spend more, and the economy begins to grow, leading to reflation. And so it takes about 10 years, on average, for things to get back to normal, when we've hit that point where, we're at a 0% interest rate, and the government's and excuse me, the bank is printing more money, buying bonds, putting money in the hands of the government, putting money in the hands of goods and services, putting money in the hands of the people through goods and services and unemployment benefits. So that takes about 10 years. And if you ever heard the term lost decade, that's this. That's this right here. And so he offers three rules of thumb, and these are the last 3 points. The first one, you don't have debt rise faster than income because debt burdens will crush you. Number two, don't have income rise faster than productivity. You'll eventually become uncompetitive. And then number three, do all you can to raise your productivity because in the long run, that's all that matters most. That's what matters most.
Can you say those three again real quick?
Yeah. So three rules of thumb. Number one, don't have debt rise faster than income because the debt burdens will crush you.
Mm-hmm.
And I think that speaks to, individually and in terms of the government as well.
Mm-hmm.
Number two, don't have income rise faster than productivity because you'll eventually become uncompetitive.
Mm-hmm.
And then number three, do all you can to raise productivity. In the long run, this is what matters most.
What's the source from that, Q?
The source, I'll put it in the chat here. I have it. I forget. I believe I put it in the macroeconomics channel in our Discord. I'm
Yeah,
gonna put
it's
it
in
in
the
this
community chat.
in the community chat.
Fluctuation of percentage from the government.
Yeah, and I'll get it in the Zoom chat here in 1 sec.
Yeah, that was actually what I was that last point I was trying to talk about earlier when it comes to that productivity production, but then just hearing how it all works together as a whole is so fire.
Yeah.
Do all you can to raise productivity, but can't have income rise faster than. So it looks so from what I'm understanding, nothing can the increase of productivity can't hurt anything.
Mhm.
Don't have income rise faster. Don't have income rise faster than. Why did I put income twice? That first one was don't have income rise faster than productivity.
The first one.
Yeah.
To say don't become competitive.
Yeah. So
Don't
the first one was don't have debt rise faster than
have
income.
debt. Why I wrote income twice?
Like you
No.
say, that's personal stuff there. That's Warren Buffett right there, right?
Yep. Yep.
Like,
Yep.
don't spend more than you make.
Yep. Exactly. Exactly. And the second one, don't have income rise faster than productivity.
Yeah, that's an interesting one. That's on a bigger scale.
Mm.
I guess when you okay, that would depend on market and industry. You know what I
Mhm.
mean?
Yeah.
Um, and what your goals are. Like if your
Yes.
goals are to be like profitable, it's different to being successful.
Mhm. Mhm.
So if it's profitable, yes. To be successful, yeah, maybe not so much.
Right. Yeah. In that part, it doesn't really correlate as well. Exactly. So I've always had before I got, involved in, not just the financial markets, because, that happened 14, 15 months ago, but about, 4 or 5 months ago, it's, leaning more into our macro knowledge and global politics, global finance, global economics. But before that period, I was in the I was in the disposition of, you know, all I can do is work and be productive and, work to change my life. I've always viewed that as the most um, important part. And so to hear him, kind of edify that and say, do all you can to raise productivity, because in the long run, that's what matters most. Because it's the economy's gonna go on its cycles inevitably. As we know, whatever goes up must come down naturally. Um, and so in that video, there's an animation of a curve, and so the line of productivity is linear. I'm gonna try and use my camera. The line of productivity is linear. The long-term debt cycle is a large loop that goes up when there's a lot of credit, and down along the curve. And then the short-term debt cycle just goes up and up, up and down, up and down, up and down along that long-term debt cycle. But
You know, that's a
productivity is that one linear thing, the one thing that we're in control of in our life. And I think that's what me, Marcus and I, we tied this to just the value of trading, the value of having the knowledge uh, to trade the financial markets, because they aren't going anywhere, especially something like Forex. Because
terrible.
stocks, at any point, stocks can, plummet, and market can be take taken out of the stock market, like what happened, I believe, last week or 2 weeks ago. Um, but in something like we're doing, it makes this skill so valuable, because this is us raising our productivity at an unbelievably exceptional rate, because we're in control of our income, really, through this skill. We're in control of our productivity at a rate that is exceeded, because of course, we have everything else we're going on. We're productive members of society. I have a job. Marcus has a job. Um, if we have kids. Kids are money at the end of the day. Um, I keep losing my fucking train of thought. But yeah, just watch that video. It's so good. Super simple. Uses animations to guide through the whole thing. I'm a visual guy, so that really helped me. I've watched the video through 2.5 times. I'm probably gonna watch it a bunch more. It's the same video, watch it over and over again, just to ingrain a lot of this stuff. Um, yeah, man, it's just fascinating. It's fascinating. And so I think as we project forward, through the election, not even through the election, but through these rate cuts, it'll just be very, very interesting to see if the drop in interest rates stimulates the economy. Because if it doesn't, we will surely move into a full deleveraging. So that's over the next couple months. That's what I'm going to be observing. Will these rate cuts help stimulate the economy? Because if not, then we have to be really careful and find that balance between those deflationary ways and then the inflationary way of printing more money to put more money into the people.
Doesn't a rate cut in rates indicate um less confidence in the dollar?
Does the lowering of interest rates, and so
Well, the
let's lock that in here. Let's lock that in here. I have a running document in which I have that
Sure it
exact
does.
information.
Pretty sure it does. Because the better the economy is, the higher the rates can be, people can pay for it. Um, they dropped the interest rates is because inflation is too high and people can't afford it. So it doesn't give confidence in the dollar, which means
Mhm.
people won't travel overseas. They won't spend overseas.
Mhm.
which means the dollar will sit or go down and gold will go up.
Yep.
That's
Yep.
my view of it, but I that's why I was thinking, looking to September, when I was saying to
Okay.
you earlier, Marcus, that I think it's going to rise.
Mhm.
But
Yeah.
hmm, it all depends on what the Fed does.
Yeah, and so understanding this from that video, just the my initial outlook on interest rates prior to that video was literally if the interest rates get cut, this increases the money supply because it's easier to borrow, which the increase of money supply decreases the value of the dollar, because
Yeah.
there's so much money now available. Everybody's borrowing, everybody's doing this, everybody's doing that. That was my initial disposition about that until that video basically told us, depending what trend of this cycle of the long-term short-term debt cycle we're in, depending on where we're at within that will gauge if the interest rates does stimulate the economy to where the cutting of the interest rates does now bring value back to our dollar. um, because if because it's supposed to in this case, um just from how I'm understanding it now, because it
Yeah.
wasn't as cookie cutter as I thought it would be, um each and every time when it comes to the interest rates. Like it's not that simple, for like, okay, if the interest rates are now increasing, that means, the dollar is going to increase now. So it's, there's a few more underlying factors that we have to consider, when analyzing those cuts.
For sure. And the
Mhm.
note I have here in our running global economics research document, um, the overall position of interest rates. So central banks set interest rates, which influences currency values. Obviously, we know that. Higher interest rates typically attract foreign capital and cause currency appreciation, while lower interest rates can lead to depreciation. But again, it's super vague, and speaking to the video and your point, Marcus, it really depends on where we're at on that long-term and short-term debt cycle, and the federal government and the federal bank's ability to just maintain that balance. Of course, we don't want to see the value of our currency depreciate. They want to avoid that. Um, but yeah, there's a lot of factors involved. Like Margie said, I thought it was a little bit more um, clear cut when it comes to currency value and interest rates. But it really kind of just depends on where we're at, on our debt cycles, and our government and banks' ability to maintain that balance and stability in the economy. It's fascinating stuff. Inflation affects purchasing power. Countries with lower inflation rates typically see an appreciation in their currency value, while higher inflation rates can lead to depreciation.
It's
No,
people won't buy it there. Mm.
interest rates. Central banks adjust interest rates to control inflation and stabilize currency. For example, in response to economic downturns, central banks may lower rates to encourage borrowing and investment, while higher rates may be used to combat inflation. But that's really the balance there, right? Central banks may lower rates to encourage borrowing and spending, while higher rates might be used to combat inflation. So that makes sense why Fed Chair Powell, he says we can't just drop the interest rates just like that. It can't work like that. Um, while higher interest rates might be used
Mm.
to combat inflation, because inflation's high right now. We all feel it, especially here in the States. I'm not too sure. Obviously, it's different. Each country has their own inflation rate, but here in the States, surely inflation is super super high, and our rates are high. So as they look to decrease those interest rates to encourage more borrowing, more investment, you see that the balance that they have to have to find when it comes to lowering those interest rates, um, because that is opposite of what you know the interest rates do when it comes to inflation and combating inflation.
Mm.
Interesting. But yeah, that's my macroeconomics in research over the last couple of days. Always ongoing, but a lot of this stuff is just super fascinating.
Yeah, news in about 26 minutes. Actually, I think 11 minutes. I could be wrong. Yeah, 6:45. 6:45. Uh, Taking a look at this chart here.
Yep.
So like
Sorry
we
to
have
interrupt.
the yeah, you're good.
Sorry to interrupt. I've got to shut down and reopen. I'm having an issue. I'm trying to get Discord up on my Mac, but
Mm,
I'm having issues with this one. So I'll tap out and come back in.
all
Gotcha.
good.
Apologies.
So sheesh, we got Fed balance sheet. It talked about that too. The budget deficit is. I wonder if that has to do with the balance sheet. If there's any correlation with that.
Mm.
Uh, Existing home sales month to month. That's also a photo that's coming out. Paid off. Closure of the mortgage is typically completed 30 to 60 days after contract. S&P manufacturing and services. Yeah, I think we're getting just a liquidity sweep here from gold.
Mhm. What time frame you on?
30.
Yeah,
Yeah, this the 30 right here.
big time sweep here. Decision making level,
Yeah.
certainly swept through that liquidity.
Yeah, and taking a look at the dollar.
Let me take a peek here at JPY. See how Yeah, doing some top-down analysis just on our dollar pair, not our dollar pair, our freaking our DXY, our DXY USD currency index. We just recently moved and filled an area of imbalance yesterday,
Mm,
which was the bearish intention. I believe so. It's good to see that area filled. Always nice to see the market work. Excuse me, work how it's supposed to. Just seeing these things happen over and over again. And seeing like we saw in gold, you see the push towards an area of liquidity, and on our here speaking on our DXY, this level of imbalance being filled. Going back to our understanding that the market is only doing three things at any given time. It's hunting, it's searching for liquidity, and creating liquidity in that process, balancing balancing itself out by filling areas of inefficient price, and then accumulating along our decision making levels. We see that just those things happen over and over and over again, which just kind of simplifies how we can approach this, which is so nice. It really simplifies things.
seriously.
Gonna find a new level target levels on our DXY, both on the bullish side and bearish side. Um, the bullish side is easy heat now. Um, because through the past day, um, imbalance has been created on our daily time frame on our DXY. So there's uh, plenty of target areas on the bullish side. But here right now, I'm gonna look to see uh, what areas the market could hunt on the bearish side on our DXY US dollar currency index.
Yeah, I got a level that we're right at right now that I want to see it respect about 101.4.
Mm-hmm. There's a lot
Yeah,
of
and
liquidity in that area. And then even a little bit
there's
further down, moving back to like 99.7, 99.6.
yeah, and even thinking about the
19.
thinking about the like interest rate cuts and what we were just talking about, and how that cookie cutter look of, oh, if interest rates get cut, this happens, the money supply gets increased because borrowing is easier. Um,
Mhm.
Thinking about that and looking at this DXY and seeing the number of inefficiencies on that bullish side, like, s- so we're eventually gonna get to a point where we do start to see this market really moving, bullish, like getting into a really nice, that is actually the anticipation, right? That's why they are this whole, economic machine, like that is what's happened time and time again. It's kind of like what he said about how everybody kind of looks at these short-term cycles too closely, instead of kind of seeing how they're impacting just the cycle within it within a cycle. Um, so that's kind of how I'm seeing that. This is on the 12-hour. So for us to keep moving lower and lower, running into this level here, and actually an area where we've seen touch, 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 like this area right here, um, just freaking all of this, like very, very strong area. We did get below it here, but this is over the course of the last year. So this is January 2023, right? So I want to see how that level holds up on this dollar. We may have hit a bottom on our dollar. Take a look at the weekly. It's so funny too, thinking about the central bank and central government involvement, um, and how Fed Pal is always trying to emphasize their uninvolvement in political, uh, like who they want in office. And that is because all the different policies and stimulus packages and this and that and this and that, um, generally just influence the money supply. So they have to kind of be really transparent in that light, because if they lean to one candidate over the other, people could just think they're doing that because of what they're gonna, what type of policies they're gonna put in place in terms of the money. So that's just a really interesting relationship.
And and likewise, they have to be prepared for anything. So
Yes.
it'd behoove them to lean towards one way or
Yeah.
lean one way or another as far as candidates go. I think they put themselves in a position to where they know what, in this case, former President Mr. Trump wants to do in terms of
Yes.
that can impact them, and they're fully aware of what current presidential nominee Kamala Harris wants to do. Because if it doesn't go how, I mean, it relates funnily. I don't think that's a word, but it relates funnily to trading. You can't be sold on one way or another, definitely. Because if it goes the other way, you're not prepared, and you're in a whole storm of shit, to put it simply. Um, yeah.
6:45. We got some bullish news from both folders this morning. Actually, I lied. We have bullish news from our services PMI, but bearish news from our manufacturing PMI. Bringing it back to the separation of the two, manufacturing PMI making up 12% of the economy, that being the industrial sector. But what we just heard a little bit earlier today, um, productivity, I from what I how I'm understanding it, is directly involved with manufacturing and the industrial sector. So that has high importance, that folder does, um, and especially with where we're at right now. Uh, Manufacturing is more sensitive to global economic conditions and trade issues. I know there was some trade issues going on over in Japan. Um, so I don't know how that exactly will, let's see, services. Yeah, so we should, see that dollar start to, dollar finding its balance here.
Yeah. Tons of bullish buyers volume in the market right now. I was looking at the DXY 1 hour time frame, looking at USD JPY 1 hour time frame. Uh, we'll see how much it wants to push and utilize that volume and momentum. Just now, where's my
Yeah, if we can just go touch that, grab that liquidity on USD JPY.
It really is crazy. So, I think it was last week, Marcus. You put me on the market sessions indicator, and
Mm.
it's so fascinating just to see the correlations and the probabilities of what happens during the sessions, during each individual session. You know, the um, so I just moved something on my chart. But the Tokyo session being a session where we see a lot of accumulation. I'm saying this in hopes that I'm saying this I highly recommend putting this indicator on your charts. I think it's a fantastic kind of visual guide. I don't keep it on all my time frames just because I don't I'm going to keep my chart super busy. But just seeing the movement that happens day after day, week after week, through our New York session, particularly that London New York overlap. It's man, makes it make so much sense why this time in particular is so valuable of a time to trade the market. You gotta fix. I hate when I move stuff on my chart, man. I need to lock stuff.
It's a massive retracement.
Oh, yeah. Just lock that puppy. Yeah, so this area of inefficient price, we're looking at the DXY beginning at about 101.6. Uh, um, an even number wouldn't do it justice. 101.63, 101.64, around that area on the bottom end. Then at the top end, 101.84, 85. So that's a really near bullish target for our DXY. Um, we'll see how strong this news is. I know we got where's my news at? I gotta refresh my Forex Factory. But it's really a battle of wills, at the moment with flash manufacturing PMI dropping bearish, dropping bad for currency, and flash services PMI being good for currency, releasing bullish. So see what kind of immediate force wants to take a hold of the market here.
Yeah, we got another folder in a few minutes. Another few high impact folders in a few minutes here too.
Listing home sales.
Yeah, and the freaking that Forex factory, bro. Look at this. Like, why does it do this? Existing home sales, medium impact folder,
Mm-hmm.
right?
Yeah.
My FX book, high impact folder. My Forex factory is starting to lose its confidence with me, especially with yesterday, them not having the NFP up there. Thought that was just super weird.
Mm-hmm.
Um, So let's
Mm,
see.
yeah.
Is the
I
home
think
sales?
that aspect of it, it's not that it's that subjective, but it is kind of subjective as far as these come like my FX book or Forex Factory, kind of gauging the impact on these folders, which kind of edifies us in our involvement in truly understanding what these folders mean. Um, yeah, even not all the yellow folders. I think we're good to still look at those orange and red folders and place high priority on them. But even these yellow folders that come in, all the news that comes in, just understanding what they mean and developing our own subjective take on it, our own disposition. I think it's highly important to do that. You utilize the information we have, of course, but not utilize that information and establish that as fact in our own disposition, but utilizing it to create our own disposition instead of just kind of taking somebody else's. How does existing home sales affect the DXY and the economy when the economy is we have about just over 4 minutes until that existing home sales releases here. Forecast 3.94 million. This folder measures annualized number of residential buildings that were sold during the previous month. So looking back to July here, excluding new construction, actual greater than forecast is good for currency. Released monthly about 20 days after the month ends. We're 2 days past, but that works. Why traders care. It's a leading indicator of economic health because the sale of a home triggers a wide-reaching ripple effect. For example, renovations are done by the new homeowners, a mortgage is sold by the financial bank, and brokers are paid to execute the transaction. All I'm hearing in my head is Ray Diallo. Is, why did I lose it? Yeah, but one your spending is another person's income. I think that this photo kind of speaks to that. As far as buying a home and the wide-reaching ripple effect that it creates. People spending money to buy a home is income for somebody else. So surely, it'll definitely have you can see why could have a volatile effect on our market.
Yeah, and I just threw this in the AI, and it pretty much said the initial volatility is usually short-lived, with the most significant movements occurring within minutes or hours of the data release.
Mhm.
Um, this being a folder that, for it to have the long-term impact, it has to have consistent results and consistent data um, to be able to support its claim. And so damn, that this is a good point too. And to your point, Q, once again, the Ray Diallo video, home purchases often lead to additional spending on furniture, appliances, home improvements, stimulating various sectors of the economy. So literally, a home sale does not only pay the person that sold the home, and that person is now going to go put more money into the economy because they just sold a home, but it's also the person that they sold the home to. That same person that bought the home is now going to go put more money into the economy because of all the things having to go into that home. So that it's makes it a little more understanding of why these home sales do have an impact on the economy. Because my previous analysis of it, I didn't place much significance on it, even when it was sitting there at an orange folder. Um, but now we're about 30 seconds out. I want to see this liquidity go get grabbed on the bullish side of things, even on the dollar. Q mentioned that inefficient price action that got filled earlier with some still lying above price. Really right about, I won't say that level. That's a little too tight.
Oh shit.
So see what happened. Bullish and neutral. So, not a major change in data here. Still bullish though, bullish, bullish, bullish. So that means home sales did increase, which should help us. Should help us out a little bit here. Gold finally moving back towards the recent all-time high it just broke, which on the weekly is kind of where I'm looking at gold. I probably won't get back into gold trading until after all this stuff is over with the election and whatnot. But I'm just going to continuously analyzing gold really on my higher time frames, just to see how it's acting on those higher time frames. And we know it's literally sitting at its highest it's ever been right now. Yen, USD JPY respecting that weekly level. I love the way that looks. Inefficiency left above it right now. Love the way that looks. AUD JPY looking really similar. This is actually hilarious.
Hmm.
Mm.
Remember, I might because I haven't, as far as the my FX book versus Forex Factory, I've definitely stayed kind of true to Forex Factory up to this point. Especially like you said, Marcus, after that photo yesterday not being on there, that had impact on the market. That's really frustrating. Um, I think I'm definitely going to utilize, at the very least, both resources right now. When it comes to just observing the news and understand what folders are coming and when. But kind of you use both in tandem to gain information. I love that my FX book. I think there's so much good information on there, different than that of Forex Factory. I think it's a little bit more expansive.
Hmm. Interesting.
We'll take out this liquidity. There we go. So that level I was looking at. You break this level, we're definitely gonna go touch that liquidity.
So this is the July high, isn't it? That they're working around.
USD JPY.
No, sorry. XAU USD.
XEU.
You're looking at JPY, sorry.
No, no, you're all good.
Yeah, since yeah, right at that high. Like we touched here again, and we wicked above this area kind of significantly, but yeah, this is certainly the area. On August 21st, we were at this area as well. Uh,
Come on gold.
yeah, no, I'm
Yeah.
looking at JPY right now.
Oh,
Oh, okay.
yeah. No, this gold is at that July high right now.
Yeah.
Yeah, and just thinking about this thing again, the inefficiency in price action, and especially once we hit a higher time frame, or not a higher time frame, all-time high, I'm placing even more significance on, that type of area getting filled. You know, so since this is on my daily chart, um, that's a lot of price action right there that we know does need to get filled. So that's about 160 pips of
Are you talking,
inefficiency.
are
So
you talking from July to the high, current high? Is
yeah,
that what you?
that was from that area. It wasn't actually the inefficiency began on August 15th, but it was from after it moved above that all-time high. You know what I'm saying? So um, after it got to like the all-time high over, so let's call it was really August 1st once it got here. Right next to its previous all-time high, it then, went downwards, right? But then on its way back up again, after it breached its all-time high, left this area of inefficient price action, which looks like that's what gold is looking to come fill now. Um, and yeah, I'm trying to look on this, slight area within there, but I don't think anything significant. I think once gold does clean this area out, potentially even coming to touch this weekly trend. Um, I definitely like it feeling that inefficiency though. And that's clean right there. That is clean. And to Q's point about these market sessions, this session in specific, we have beef. Me and this market session overnight. That thing is that thing gets me. That overnight Tokyo, no, I don't need to be trading Tokyo. Especially on gold, man. Especially on gold. Just because I got manipulated. It's just it's an ugly session for me. Um, which also it just comes from back testing. The more we see something, VXT, man, VXT. That's all I gotta say. VXT.
But it's undoubtedly, more and more difficult to gauge direction during that Tokyo session. Undoubtedly,
Yeah.
undoubtedly, little bit um, takes a little bit more insight grabbing um,
Yeah.
from an economic standpoint, understanding what's really driving price during what will drive price towards a certain point to a direction in a direction during that Tokyo session.
No, and that's a great point too, bro, because we're using this session and we normally have news to help influence
Yeah.
our decisions.
Yeah.
And it's actually going to require more work for us to back test that session, because then I'm going to want to draw lines between, okay, what was news that day? What did news give me that day? Okay. And to just see how it continuously impacted price throughout the day. Okay. If news was bullish and we saw price respond accordingly in the morning, did that stay consistent throughout the night? Or is it always acting inversely to the news that happened in the morning? Like, I would want to piece that type of stuff together. Um, because like we said a few different times, when we're doing this thing at different time zones, I'm gonna want to execute on those other time sessions. So it's something I definitely have to consider as USD/JPY is being stagnant at this 5 minute level right now. As we're looking at my MACD on my 5 minute, we see the potential for us reaching a peak on our signal line. If we just look at the correlation here of this level, right? And then combined with this volume bar here on our MACD, slide up to the 15. 15, we did just get a fresh dot though, fresh green dot. So um still looking at a peak though, still too high for me to think we're gonna continue through
This journey.
yeah. So I actually like possible correction from this level right now. Gold almost to that inefficiency fill. Yeah, it's just beautiful, bro. How many pips was that this morning from gold? Shit. 237.
Yeah, I'm gonna be super observative until for the next week, I guess, um through next week's trading session. Um in my personal monthly budget, at the end of the month, I think I believe the 28th or I think the 31st. I think the 31st is a Saturday. On Saturdays I always close. Yeah, yeah.
Father's Day here.
Is it really?
Yeah, 31st. Yeah.
The 31st of
Wow.
August?
Yeah.
I'm gonna write that down. I'll make sure
There
to
was September, August, September, but it moves for time. Yeah.
Interesting.
Father's Day. I'm gonna write that down. Make sure we get a little message out. That's awesome. Important day.
No, that's actually dope. I did not know that it was different days than the States.
Yeah, it's different. It's different in different parts of the world. I'm not entirely sure why, to be honest, but
Yeah, that's actually super interesting.
mind you, there is a time difference, you know. So
That's actually a good point. That's a good point.
Yeah, for sure.
Yeah, this
Yeah, so I'll close on that Saturday. Pick a bunch of money from the safe at work. So I have a couple hundred scheduled to deposit into my live account. So really just gonna work on this, but like Marcus said, looking at my higher time frames, really observing my higher time frames. I'm looking at these areas. I'm gonna continue to observe gold. I think, over the next couple months, you know, observing gold right now, I think is very, very valuable because I think I mean, the potential of gold's always crazy. Um, but just what we're going to see movement wise from our dollar, and in the gold market, that gold is going to be there's going to be so much clean, beautiful movement, on XAU USD over the course of the next couple months. So I really want to work on my setups, uh, observing my entries, observing my exits, understanding my risk, on that pair specifically, and then as well as USD JPY. I think I'm really just gonna stick to those pairs right now. I was, solely XAU USD for months. Now I've kind of implemented USD JPY. Really like USD JPY. Um, I love the NZD USD. I love the Aussie dollar USD pair. Those two pairs are two of my favorites outside of the two that I'm trading now. So as we move through the next couple months, I'll potentially add, those two pairs, into the repertoire. But really, especially over these next couple weeks, is really going to focus on these setups, observing my, USD JPY, observing my XAU USD, and back testing those, uh, getting my back testing hours in on those pairs, in preparation for, um, the volatility that's bound to come, um, over the next couple months. We got tomorrow. I wonder when with this Jackson Hole symposium, Marcus, and maybe you might have insight on this. It says it's all day, and this is day one. Day two, I'm guessing is tomorrow. Yeah, tomorrow. Day three on Saturday. Does it stop there? I'm wondering, so does does the information release after each individual day or after the entire symposium? Is there like I don't know, like a roundup, if you will, where
I
which insight will
believe
be gained?
um it gets released the week after at there's like a meeting minutes, I'm pretty sure. I could be mistaken. I thought there is a, or maybe it's at the end of the month, but there's actually another large meeting. Uh, so tomorrow we'll get some, depending on if Fed Powell speaks to today, may get some insight from him tomorrow about it. Papers presented at symposium are so papers presented at the symposium are posted online at the same time they are presented. Other papers such as discussant comments may be posted after the event. So those are the reporters and whatnot that are asking questions, making comments. Transcripts of the proceedings are posted on the website as they become available, which generally takes a few months. That's bullshit. All papers and transcripts are later compiled into proceedings books, which are made available online and in print free of charge. Uh, so, I mean, the first one, papers presented at the symposium are posted online at the time they are presented. I mean, so if we want to pull some what they're talking about, we'll be able to see it. Key speeches, particularly that Fed Powell is scheduled to speak Friday morning, are closely watched for policy signs. So yeah, that speech from Fed Powell will kind of be surrounded by that symposium.
I mean, I just
A
put an
few
article in the Zoom chat. It's from Bloomberg. It talks about the title is Powell confronts policy crossroads with all eyes on Jackson Hole. I've read through the first couple paragraphs here, and I think would be a really good kind of resource for us to understand um, uh, Powell's speech, and how that relates to Jackson Hole, and how both those, the speech and the symposium, kind of relates, and the important things that we should look at and pay attention to um, as these next few days pass. Um, yeah, just reading through this. This is a really good article to just to read through. Really short article and not very long. I'm trying to find some hot points here to rattle off. The hotly anticipated speech at the Fed's annual gathering in Jackson Hole, Wyoming, comes at a high stakes moment in the U.S. Excuse me, comes at a high stakes moment for the U.S. central bank and the U.S. $27 trillion Treasury market. Powell and his colleagues appear on course to lowering borrowing costs, which that's the interest rate borrowing costs, just 7 weeks before the presidential election, a precarious task that will put the Fed chief and his colleagues under intense public scrutiny. It also comes as officials pay increasing attention to the cooling labor market after years of laser focus on price pressures. The question is, will we have a policy error? That's why the market's teetering on edge around the Jackson Hole statement. What we need to hear from the chairman is where the Fed is on potential policy pivot.
Like this little paragraph right here. The key question for those watching Powell, particularly in bond markets, is whether another lackluster jobs report would open the door to a jumbo-sized rate cut next month or force the Fed to take an aggressive approach to cutting rates in the months that follow. Mm.
I think what they reported was there was going to be a couple um, rate cuts before the end of the year, not one big one. That was in that report with Powell.
Mm-hmm. Mm-hmm. Yeah,
Um,
there's three potential dates for that to happen. So three individual times in which they could um uh cut the rates. Uh, yeah, and it's funny, listening to Powell and just how vaguely specific he is, just in his terminology, and um how
I
he
love it.
references
Vaguely
things.
specific. It's awesome.
So funny.
So true. Banker.
Yeah. Oh yeah. It's
This
spectacular.
this paragraph is interesting. It says, when Powell spoke a year ago at Jackson Hole, he and his colleagues still seemed headed in the opposite direction. Fed officials had just a month before lifted their benchmark rate to a range of 5.25 to 5.5%. This is the interest rate, the highest level in a generation. Powell described the labor market as tight, called inflation too high, and said the Fed was prepared to raise rates further if appropriate. And so that was last year with the current state of the economy. So it'd be interesting to see how he views the labor market this time around, and to hear his standpoint on current inflation, um, and specifically the verbiage of which he uses, I've found to be very important. Um, so, it being too high, I feel like at this time was very important for us to understand. And so when we, I love when I'm reaffirmed on the market players and the people that contribute to this market. There's this paragraph says we expect him to acknowledge that conditions are in place for them to begin dialing back policy soon. Um, the person that said this was an economist at Barclays. Barclays is one of the top Forex players, like movers in the market. I think when I looked it up, it was back in 2021. They were within the top 10. It was like seven of the top 10 were US banks. And so I just love when I see that again. Let's see. It's not clear whether he's going to explicitly say September or not, but I think the message would be that they seem well positioned to do that. So of course he's not going to come out and say, yeah, in September we're going to be cutting the rates, but this economist thinks the message that Fed Powell presents will be in position to kind of signal that. Powell's message this year will require careful collaboration. The rationale for cuts will have to be strong enough to address the political pressures surrounding the Fed in this election year. And so when I hear that, there's a few, I deal with customers, all day, and there's a few things that a customer says to me all the time, and it's Bidenomics. Customers love coming in and telling me about the Bidenomics and saying just like the economy that has transpired because of Biden. So thinking about this statement right here, the rationale for cuts will have to be strong enough to address the political pressures surrounding the Fed in this election year. Um, because of course, when something's going on with the economy, people look to the government, but you know, of course, we're understanding that a lot of the actual money stuff is coming from the central bank. It's not necessarily it's coming from the central bank and the Federal Reserve. It's not necessarily coming from the central government. Um,
It's
that
always been the way, mate. It happened in every country. It's the governments have nothing to do, honestly,
yeah,
with
yeah, but it's crazy how
the economy. They pass policy to make
yeah,
whatever
crazy.
decisions the banks make.
Mhm.
So they make what the banks determine, they put into process um, to make it happen on the ground.
Yeah,
Um,
yeah.
it's always been that way, and, and we without getting too political about it and too like
Mhm.
in depth about it, and it's not a racist or anti-Semitic comment, but the fact of the matter is the banks of the United States, in fact, the world, are owned by the Jewish community. Always have been, always will be, and that's not because they're Jews. They do. That's where the money is, and that's why we have wars because that's how they're
That's
funded. All right.
Mhm.
So it doesn't matter where it is. It's certain
Yes.
people own certain amounts of money in certain places, and that culture has always owned the money, always.
Yes.
All right. So it's the political sentiment is really just how it works on ground.
Mhm.
We like you guys when you analyze what's going on, right? You're analyzing exactly how the market's moving because of how um, they wanted to move. But the thing, then this is the trick with being like I'm trying to learn to be like you guys as a master trader. You guys are master traders to read it in such a way that you're responding to what happens, not for any other reason, like political
Mhm.
reasons. But
Mhm.
they have impacts on it, right? Like, why do they do it? Okay, so it could completely turn around simply because, Biden steps out,
Mhm. Mhm.
because
Mhm.
they say, well, people have told him he should step out. And then all of a sudden we have something we've got to deal with. So that's
Mhm.
news we've got to deal with. But at the end of the day, it's what the banks do that make the difference.
100%.
That's,
Yes.
100%.
I don't know, am I
100%.
wrong? Am I
Yeah, no,
wrong?
no. And Marcus and I, we were before I left his house last night. This was the conversation that we had. That's spot on. And I don't think a lot of people realize that.
Yes.
I think a good amount of people do. And
They don't want
maybe
to
they
realize.
yeah,
It's
maybe they
too much.
realize it, but they think that it doesn't matter as much as it does, and they just don't understand just the way it works. But
Yeah. And it's
that's what I
factual.
think. Yeah,
It's
yeah,
factual.
yeah.
The other thing is that, and I don't know if you guys know this, but I mean, the way that USA works, and I've known this for some time, but you could prove me wrong. Um, but the way that USA, most countries work, I should say, not the US, but most countries work. We're the same. We're the same, but for us, it's China. For you guys, it's always been Japan. If
Hmm.
Japan,
Mm.
if Japan went under, it had it broke down.
Hmm.
All the monies have been lent over the decades from Japan to the US.
Hmm.
Mm.
Right. So if Japan and so US is in debt to Japan for trillions and trillions of dollars. And if Japan goes down, US falls. Right. So they support the economy of Japan and others, but they're the major ones simply because of that, right? For us in Australia, it's China. Right? So we have certain debts and liabilities to other countries, and that's one of the biggest ones because of our iron ore and all. Because China is such a big industry as far as industrial and metal goes and building. They utilize us, but we're in debt to them. We've borrowed from them essentially. It's the
Hmm.
same with the US. So, it's really important to know that the way that US dollar and JPY works,
Hmm.
right? And how they are so similar in the way, not as volatile as gold, but they're similar in the way of DXY, right? I wonder why that is.
Yeah.
Yeah.
Yeah, yeah.
No.
They have to have a parity. So it's interesting, and like what you're just saying, is a lot of people don't realize that. Um, and once again, it's not an anti-Semitic thing. It's just a fact that the
No.
Jews own the banks. They do.
100%.
Hmm.
They own the banks.
Hmm.
Um, Over here
Hmm.
too.
Yeah.
It's not a
Yeah.
river lie. Melbourne, everywhere, they own the banks of the world.
Hmm.
Um, and they've not done it for any particular reason. They're just very smart people about doing that. They're monetary that way. So
Yeah.
something important to know when we
Yeah.
think about where economy moves in countries and the dollars.
And that's kind of where my personal that's why I got so intrigued by USD JPY because I started as I kept diving further into because it actually started at the gold level. Like when I was looking into gold a little bit more and trying to understand how how gold moves a little bit more. Then I started seeing how China's a really big producer of gold, and then I started seeing other countries that are really involved with gold. Um, and then I started diving a little more into USDJPY and how investors use USDJPY as like that safe haven space for when the dollar's depreciating. And I started to think like, bro, why? That's kind of my, you know, and what you're saying is just so spot on for my knowledge as I am thinking about what I want to start looking at next. And to your point, I just looked up this really quick question: what kind of economical support does USD provide to Japan? What are the debts and liabilities both parties have to each other? And just reading this first bullet point, the U.S. is a major export for Japanese goods. Japan exported approximately 145 billion in goods to the U.S. in 2022. 145 billion.
That's a trade, right?
Yeah,
They're the
yeah,
trade embargoes that they do.
yeah. But dude, and so that's so crazy to see that number, to see
It,
that number.
it's incredible. No, actually, that might be one figure. I reckon it's a lot higher in other areas. You're talking
Yeah,
Yes.
military.
Yeah. Oh,
yeah,
yeah.
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 You won't
And
see
look,
those, you won't see those on Google, mate.
even right here, this is not recent data, but USD military spending in Japan. The US spends about 2 billion per year on base operations, military construction, and housing costs in Japan. So they're not necessarily like they're trying to house their military they have in Japan, but they have to pay the Japanese economy to house their US soldiers.
Um,
So,
that's
everybody's
part
always
of the
like,
bit.
like, why do we have soldiers here? Why do we have just bases here? Like, it's because of the money, the movement of the money. Like, that is literally why. We
And
were talking about,
the
what was
agreements,
that?
and the agreements, because I mean,
Yeah.
Mhm.
Japan being such a smaller country, but the ways that they get into places is go, well, we have technology, we have people, we have
Yes. Yeah.
so many other things. So you let us do this, and we'll allow you to do this, and you know what? We'll give you money for it, but
Mhm.
you owe
Yes.
us. But you
Yeah.
owe us that money back. We will support you. Oh, hang on,
Yeah.
they need the money, and to your point earlier, Q, about printing money.
Mhm.
Like, no country wants to print money because
Mhm.
when they do, it actually affects their dollar.
Yeah.
You want to build an economy. You don't want to flood it with extra money.
Right.
When you flood it with extra money like Italy did, you end up with a lira that's worth like a fraction of a cent.
Mhm.
So they don't want to do that. But they will borrow money on credit from other countries and borrow other things to prop themselves up, and they work on trade embargoes. It's like not embargoes, trade agreements. You
Yeah.
know, in Japan, China, all the same. Europe was part of it. Probably in the 70s and 80s, not anymore. Right.
Mhm.
So
Mhm.
it's the contra deals, mate. South America, Jesus,
Yeah. So
Yes, sir.
it's
really
it's
interesting,
so
right? How it
fascinating. Yeah.
impacts it,
So
how it
interesting.
impacts. And like I said,
No,
we're looking at these things now, the way it works, in a timeline like this. And
yeah.
it's what really,
Yes.
like, we look at a timeline like this, and we respond to this to make our dollars
Mhm.
on this. And the global thing, and I think you guys have the brains for it. I'm not quite there, but you guys have the brains to actually think about the bigger picture of how that actually works to make it probably more agreeable to the to bloom trading. You know what I mean?
Mhm. Yeah, exactly.
You know,
And that
you
that's the
guys
whole goal. That's
are
the whole
learning.
that's
Yeah,
the whole
you guys
thing.
are learning incrementally every single day. You know, and freaking I applaud that. I'm not there.
So we'll get there together. That's
That's
what
what's
For
this
sure.
happening.
whole
That's what's
this
happening.
whole community is for, man. So we can all learn, grow. You know us. We're not going to gatekeep any information. We're doing research, like we're talking about this stuff as we're researching it.
Yeah,
So I think,
I
just
love that.
as we move, man, it's just we're gonna have so much. Man, Marcus and I, we talk, 2 years from now, 3 years from now, is the amount of knowledge we'll have consumed at that point and our ability to utilize that information to just gain that much more edge in our trading. Because at the end of the day, like we want to be better traders. Like
Hmm.
that's what why we're doing this. Of course, it's fascinating. It's so interesting to learn about, but fundamentally, we want to learn macroeconomics. We want to learn global economics to support us as traders and for us to gain edge in the market. And
Yeah.
we felt it up to this far, but shit, 2, 3, 4 years from now, that's the edge we'll have, and from the investment in our knowledge at this stage, at this point, will prove just so beneficial. I'm super excited, super excited,
Yeah.
man. I love it.
I'm
Fantastic call today.
excited for you guys too, man.
No, there's
Fantastic.
there you said something I had to write it down before I forgot about it, but the agreements when it comes to Japan, me and Q were talking about yesterday back in I don't know what year exactly it fell under, but it was back during the time of Saddam Hussein and the involvement that just the oil that went involved with that whole with just everything that had to go with on with that and the agreement that the US went into with Saudi Arabia for Saudi Arabia to basically give every dollar they ever got from oil, every single dollar they've ever gotten from oil and had to give it all to the US in exchange for the US to basically pay them back in interest. And so to your point about the stuff with Japan, that literally just came around full circle. So I had to just bring the Saudi Arabia thing up in oil just because now oil is a really big part of our economy.
Yes,
And how did that happen, you know? So
absolutely, absolutely.
um the second one you said was the involvement of um like where the money's coming from, the Jewish community when it comes to the money. Um and this video is one I really recommend anybody to watch. But in this video, like in the very beginning, it was like somewhere around like the first few minutes, he talks about this little animation, talks about how the federal and I'm just gonna play it real quick. But he was just saying how they're not the Federal Reserve or the people that are this guy right here that's making the decisions about the money, about how much money we can actually print or who's making the calls about the money is has nothing to do with the government. He is a one of the private investors. And the private investors are, to your point, the Jewish community
Mhm.
because those are who control basically all these major corporations like the in terms of who has all the money um and so that this animation I really recommend anybody watching just to understand the Federal Reserve um and what this name actually federal how that contributes to anytime we hear federal, we think government, but that is not the case at all. So, but yeah, man, good stuff.
100%. Yeah, good show, good conversation today, man. We learned, we got better today. I have I'm going to the lake today. I'm like gonna get some R&R out on Lake Pleasant today with the homies. Mark and I gonna get some work done later this afternoon, so I'm sure we'll have some further insight to share with you all in the Discord later this evening. But man, we had a good week this week. Good week of back testing. Good week of research. And yeah, we'll be same time, same place Tuesday next week.
Yeah.
Well, Tuesday will be a really fascinating call because we'll have heard the POW, we'll have gotten the POW data, we'll have gained insight from the Jackson Hole Symposium. So we'll have a bunch to talk about come Tuesday next week.
That'll be interesting. Really interesting to see the movement between now and then, and at that point.
Exactly. Yes, sir. Yes, sir. Yes, sir. Jason, Joe, Justin, appreciate you guys
Thanks so
being
much,
with
guys.
us. Appreciate you guys. We'll see you guys next week.